Alright, hello and welcome guys, Yasir Khan again, and in this video we will talk about why the government cannot truly tax the rich. And this applies to pretty much every country around the world, no matter what you hear in the news, no matter what it seems to be in real life. The truth is that for the most part, the people who are truly wealthy in a specific country, they just aren't taxed as much as they should be. Now, the first reason which relates to that is because these people earn passive income. Okay, so they're not trading their time for money. So when they file their taxes, they're not filing for earned income, which gets taxed the most. They're filing for passive income, which gets taxed the least. And if they do everything properly, they will get taxed at 0%. Now, the reason for that is because by far it is the wealthier class which invests into society and infrastructure in a specific country. So the government has a reason to kind of incentivize them doing so, right? Because they create more jobs, they create more malls, strip malls, offices, commercial buildings, residential buildings, sports complexes. Most of this work, even though some of it is done by the government, most of it in one form, in one shape or form, is done by people who are from the wealthy elite, right? Which is why they get a separate tax rate. Now, a lot of people say that this is unfair, but that really isn't the case because the tax rate can be applied to anyone in a particular country. So the tax code, sorry, not the tax rate. So if you start earning passive income, then when you file your taxes, you can get a very low tax rate. All right. So it really depends on how you earn income and how, in other words, how you make money and what strategies you use to get there. Okay. The tax code doesn't really differentiate between people, but it does differentiate between how that income, how that money is made. All right. Now, what happens when the government decides to increase taxes on this wealthy class? Well, doing so would mean that the passive income that they're receiving gets taxed more because, once again, for the most part, they're receiving passive income. In order for the government to do that, they have to send out the message that even if you invest in society and create jobs and create businesses, and give other people employment and give other people housing, even then we are not ready to give you a tax rebate. In other words, you will be paying the same or similar tax that other people are paying. And there simply hasn't been too many instances of a country being able to do that, because whenever even talks of these start happening, the wealthy class, they move their money to a different place because, well, after all, it's their money, so they can do whatever they want with it. So let's assume that, for example, the tax rate in Canada for passive income goes up. Okay, well, the people who have that kind of money, who would be earning passive income, would be able to take the money out of the country and invest in, for example, South America or Asia or somewhere else, right? And this could take out billions of dollars out of Canada, because you already know how wealthy people who with money are, especially if they know how to use money the right way and invest money the right way. Okay, so please understand that whenever there's talk of a tax increase, it is always related to the upper middle class who are earned income. Okay, so we're talking about tax increases on doctors and lawyers and surgeons and investment bankers and all, these high paying professions who are which are already paying anywhere between 40 to 50% in tax, right? If you look at the tax code properly, you will understand that the truly wealthy are almost never touched. And this is a very important point to understand, because once again, the goal of this channel is to help you understand how financial freedom is achieved and how wealth is created, and you will not be able to do so without understanding how the tax code works. The tax code is written by the rich for the rich. Okay, and I'm not some conspiracy theorist. It's just that people who have the most pull in society, the most authority, the most money in society, almost always make the tax code. Now, sure, they might give concessions to other, the middle class or the poor, but the tax code is almost always written to protect their interests. Now, you can play the same game that they're playing and invest for passive income, which is what I've been teaching people for the last couple of years, but that's your choice. If you keep earning earned income, in other words, if you keep doing a job, doing the 9 to 5 and trading your time for money, then you will, by necessity, pay higher taxes because that's how the tax code is written. Now, on the other hand, if you have investment properties, if you have dividend stocks, if you have royalties coming in, those by definition are passive income. And that gets taxed a whole lot less. Okay, so I hope this video helps, and let me know if you have any questions. Thank you.